Traders, I think, should get out of shorts and either buy or wait. But I think it's okay to be long for a swing. You're risking to below 24, so you have to trade small. And minimum objective would be to make what you're risking, which would be looking for a move somewhere up in this area. They're buying the 60-minute moving average. Now 24, a multiple of 12, it affects the appearance of the 60-minute bar. And it closed pretty far above the low of the hour. And I have two observations about this. First of all, a fairly conspicuous tail. And then what's a little bit harder to see is that the hour closed above the moving average. So traders are paying attention to the moving average. Possible low of the day, at a minimum, it's a reasonable candidate for the low of the next hour or two. The bears double top bear flag 20, but a sell climax, a wedge bottom at support, probably will get a second leg sideways to up, and therefore probably buyers below 25. So yes, double top bear flag 20. I'd rather be long or look to buy until we've had a couple legs sideways to up. So I'm not willing to sell below 25. Still possible double top 20 at the moving average, but a sell climax, wedge bottom, we should get a second leg sideways to up, and therefore it's a low probability sell below 26. The stop for the bulls theoretically is still below 24. You could get out a point or two below any bull bar, 26 for example, but there probably will be buyers below 26. 23, a bad buy signal bar. Some mirrors sold the 23 high, sold more higher, betting that we'll get back to at least one tick below the 23 high. And we probably will. I don't know if we do it in the next couple of bars, but at some point in the next hour, we probably will. Remember, the bears are hoping this is just a pullback in a bear trend, but too climactic and at important support, the bottom of the gap, 60-minute moving average. So probably not going to go a lot lower over the next hour or two, probably not going a lot lower for the rest of the day. The bulls are hoping the entire sell-off was just a test of support, a sell vacuum test of support. They want a reversal day, and they might get it. But most likely, we're going to be in a trading range for at least a couple of hours, maybe the rest of the day. So traders will take relatively quick profits after a few bars up, a few bars down. Right now, we're in a bull leg, and we should get at least, it should subdivide into at least a couple small legs up. And 14 high area is a reasonable target. The traders right now are deciding, they have decided that the bear trend has ended. It probably has for at least a couple hours. And then what the traders don't yet know is, are we reversing into a bull trend or are we converting into a trading range? And trading range is more likely. Still double top bear flag 20, but probably a minor reversal. So probably we'll get a higher low. As I said, 23 bad buy signal bar. So we might test below the 23 high. That would also be about a 50% pullback. So probably buyers not too far below. Here's 50% pullback. We're probably going above the 26 high. And the bears will try to get a wedge, 1, 2, 3, or 1, 2, and then 3, and maybe a double top around the 14 high. They're trying to get a double top bear flag here, but extreme sell climax at support. Probably we'll get a second leg sideways to up. It could simply be sideways, so we could, just go, get a small bull bar and then get a double top 26. But it's so extreme that I think we'll probably get a second leg up and not just sideways. The sell-off was so extreme. Plus, it's at such an important support level, 60-minute moving average. Higher low, but disappointing for the bulls. And that's another sign of a trading range when you think it's going to go up, but there's something wrong with the buy signal bar. And then 26, you know it's going to go down, but there's something wrong with the sell signal bar, a bull body, right? So we're probably in the middle of a trading range. What do? Well, if you're long 24, you could still be long, stop below 24. And if you're short 27, betting on the double top at the moving average, your stop is above 26. In terms of probability, we're probably going to get a higher low and a second leg sideways to up. If it falls below 24, there'll be buyers below. They bought below 11 and made money. They bought below 14 and made money. They bought below 20. They bought below 22 and made money. If we go below 24, the computers are not stupid. They see that buying at the prior low and buying more lower is a profitable strategy. So there will be buyers below 24. Probability very high, probably 80% chance the computers buying the 24 low and scaling in will make money. That's a 50% retracement of the sell-off. I think there's better than a 50% chance that we'll get there at some point today. If we go to a new low, then the 50% retracement would be lower. But right now, that's where it is. This is a reasonable candidate for the low of the day. So I think there's probably at least a 50% chance that it will be the low for at least the next couple of hours. The bears are hoping 27 is a resumption of the bear trend, and 28 is a pullback, and therefore 29 is a low one sell signal bar. But I think it's a low probability bet. I think it's more likely that we'll get a higher low. And for the bulls, 29 is a bad buy signal bar, especially after a doji 28 and another bear bar 27. So when things do not look the way you want them to look, whether you're a bull or a bear, when there's something wrong with everything, you're probably in a trading range. Can you sell on a stop below 24? I would not. I think if you're selling below 27 or below 30. I did not. I'm looking to buy again. I was waiting for a couple legs up to sell. Instead, we got a couple legs sideways. We had up on 26 and then sideways 28 and then again on 30. It's an II. It's a triangle on a smaller time frame chart, breakout mode. But I just don't think we're going to go much lower. I think we're probably in a trading range. Well, I did not sell and did not buy. I'm going to wait to see if we get a reversal up, and then buy the reversal up. Normally, with this much extreme selling, we're going to transition into a trading range. And I just don't want to be selling at the low. A bear surprise 31.32, so that will make me want to buy at least a micro level bottom. Bear surprise typically will have at least a small second leg down, so that will, I think, reduce the number of bulls buying above 33. A lot of the bulls will want a micro double bottom. And for selling, I don't want to be selling at the low, because since bar 11, bulls have been making money buying at the lows, and they bought the 24 low. and they probably will make money. We'll probably go at least one tick above 24. Okay, we're just about there. So what's the fundamental, what's the economic reason for today's sell-off? It's not economic. It has to do with what I've said last week. Up for too many days, we had unusual streaks in both on the daily chart and the 60-minute chart. Expanding triangle, 20, 24, 32. Bulls are hoping this is just a failed breakout below a wedge, but 31, 32 strong enough so that a lot of the bulls will be hesitant to buy above 33 because they're concerned we might get a second leg sideways to down. You can see the limit order bulls still making money, and that usually means the market will transition into a trading range. When the bears are strong enough to create a pair of bars like that, a lot of the bulls want more evidence that the selling has ended, and they're hesitant to buy a first reversal of 33. They'll want a micro double bottom. Bears, I'd get out above a bull bar closing above its midpoint. I'd get out a point or two above any bar, bull or bear. And for the bears, 33 is an inside bar and a bear trend, so it's a low one, like 12. But we're starting to get two-sided trading since 20, and we're at major support, the 60-minute moving average. So I think it's a weak short below 33. If you're selling, it's better to sell bounces like 27, which I did not sell. Not a good sell signal bar and not a very good buy signal bar, especially after those two big bear bars. And when bars are not good stop order bars, they're probably good limit order bars. So they're probably sellers not too far above 33 and buyers not too far below 33. Bulls, if we get one more push down and a reversal up, that would be a higher probability stop entry buy. The target now for the bulls is the top of the most recent leg down, the 26 high. I've been comparing it to this. Here we got a couple legs up, 1, 2, or 1, 2. We got a new low, we got another new low. But tails, smaller bars, the momentum down transitioned into several overlapping bars with tails, bull bars. So we're probably going to do that. We tried to do it here and then unable. We got another leg down. So we'll probably start to try to do it again here, or maybe we'll get a small second leg down and then try to do it. In any case, I don't want to sell at the low. If I'm going to sell, I'd like to sell closer to the average price. 33 is already a second leg sideways to down. Up on 34 is already a second leg sideways to down. So if we reverse up now, the bears will have their minimum objective of a second leg sideways to down. Probably we're going to go a little bit lower. The bears would like us to keep trending down all day, but with this much climactic behavior, a trading range is more likely. Okay, get all the way back up to the open. And Mike, it's kind of a midday trend reversal. The low is at 35, but middle of the day is 40. And sometimes you get a midday trend reversal that just keeps going up all the way back to the high of the day, open of the day. Why did we sell off for so long down here? I think a lot of the bulls wanted to find out if traders were going to buy the 60-minute moving average. Everybody knew they would, but they wanted to see how far down we would go before the bulls came in. They tried to buy here. They stabilized here. It's almost a perfect II, and then we reversed up here. Not a big break above the moving average, but 3 bull bars. So we probably were going to go to the 26 lower high maybe to the 50% pullback. And right now we're just above the 50% pullback at the top of the 13 sell climax high. We've probably seen the low of the day. We've probably seen the high of the day. We might oscillate around the midpoint, which is this line. That's the exact middle of the day. Or we might get down to the 60-minute moving average. But this rally is looking good for the bulls. Small pullback bull trend. And where are the bear bars? We're not getting a lot of bear bars. So that reduces the chances of this going down very much. It's still by the close since maybe 42 or 43. But as I said, I think we may stall around the midpoint of the day's range. We still could get back up to the high, but these bars are not all that big. So there might not be enough momentum to get us all the way there. And if it's not going to get there, then it has to settle on some alternative. And one alternative is the midpoint of the day's range. The bulls will want the day to close at least a little above the midpoint, and therefore they can claim they won the day despite the sell-off. And the bears want the day to close below the midpoint. On these gap down days, these bear trend from the first bar, when they're fairly climactic, you can get a trading range or you can get a reversal. So big sell-off and then just drifted up for the remainder of the day. Did not get to the high of the day. When you have a lot of selling, a lot of bars, and you get a reversal, usually you have a hard time getting above the high. Sometimes you get above the high, but if you do, usually not much. More often, you just keep rallying, and then here we just ran out of steam in the final hour. But this is similar to today. A bunch of big bear bars, a series of sell climaxes, and then a reversal. And a pretty good reversal. But it stopped at some point, and today we'll probably do that as well. Another example. Lots of examples. This one made it almost all the way back up to the high. But when the selling is this significant, and then you get a reversal, it usually has a hard time making a new high. And if it does make a new high, it usually has a hard time going much above the old high. Really nothing to short. Wedge 1, 2, 3. I don't know if my mic was on, but wedge 1, 2, 3, tight channel. Unlikely to make a new high. If we do get to a new high, unlikely to go much above it. This is impressive, and therefore we're probably not going down to the low. The bears might be able to get the market back down to the 60-minute moving average. I think the fight is going to be over the midpoint of the day. This is a 50% retracement of that. And we may just enter a trading range here. The bulls want the day to close above the midpoint, and therefore they can claim that they won the day. And the bears want the day to close below the midpoint. Well, this is what probably the remainder of the day is going to look like. Sideways, rally to some resistance level, and then sideways. If we reverse, probably not far. The bulls are hoping we keep going up. Here we got a new high, but not much above the old high. Here at the end of the day, we broke out, and it looks like we may have made a new high, but not much above. Can you sell? How much money do you plan on making? The reward is small. And when you have this many bull bars and so few bear bars and no big bear bars closing on their lows, the probability of making much money is small. So you have low probability and low reward. And therefore, it's not for stop entry bears. Some bears might be scaling into shorts, maybe above 27, maybe above the midpoint. But when a trend looks like this, very tight, not much overlap, no bear bars, it's usually better only to buy. Can you buy the 61 low? They bought the 47 low, the 56 low. with the 3 legs up and with the market right at a key price, I think it's probably better not to buy the 61 low. If you do, you probably need a wide stop somewhere down here and scale and lower. But the 3 moves up, we're probably going to get a couple legs sideways to down. Might go up a little bit more first. 62, a high one. They bought above 49. They bought above 57. But I do not think many bulls will buy above 62. It's a 3rd leg up and a bear bar, and we're at the midpoint of the day. So I suspect sellers above, and that will probably start to enter a trading range here. I won 63, but I suspect that this is going to lead to exhaustion. This is a lot of R's up, yet we're probably not going to make it all the way to the high of the day. So you'll get bulls realizing that as strong as it is, it's probably not strong enough to go there. So a lot of the bulls will start to take profits. And they might conclude that we'll oscillate around the midpoint of the day for the remainder of the day. So probably not going to a new high. Very unlikely that we'll get down to a new low. I think this is a test of the 60-minute moving average. 60-minute chart, 70 bars without touching the moving average. So traders have been willing to pay an above average price for a long time. Now they're finally getting a chance to buy at the average price. Big enough bear surprise, these 2 bars, now 3 bars. We might get a second leg. We're probably going to get a second leg sideways to down. So even though we have a rally here, I think instead of going straight up to a new high, we'll probably form a lower high and test back down, and then maybe form a triangle, maybe a double top and a double bottom. But everything is still bullish. Daily, weekly, monthly chart, 60-minute chart. So it's still more likely we'll go higher. We're starting to get into a difficult time of the year, August, September, October. So I suspect the bull trend on the higher time frames will end. Here's the daily chart. Bull channel, higher highs and higher lows. Here's the weekly chart, a small pullback bull trend. All the pullbacks were small. So at some point soon, probably this summer, this will transition into a trading range, which means we'll have to get a pullback bigger than the biggest prior pullback, which was 10%. So if bigger than 10%, then maybe 15 or 20%, and probably will last longer. This one lasted 2 months, so we'll probably get a 2-month correction of 15% or so, maybe 20%. But no credible top yet. And until there is a credible top, everybody is going to continue to bet that will go higher. Traders will buy a 20% pullback. There are a whole bunch of traders who are underinvested, and they're just hoping for any kind of a significant pullback that would allow them to buy. I won 64, but parabolic wedge and just above the midpoint of the day's range and 2 decent bear bars. Anybody buying 64 probably needs a wider stop. I think it's probably better to wait for a couple legs sideways to down before buying. Probably sellers not far above 63 and not far above 61. A lot of the bulls will wait for a couple legs sideways to down after a buy climax. Pretty climactic here. Bulls waited for a couple legs. Here they got 3 legs, a wedge, and then they bought. If everybody thinks there are sellers above 63, a lot of traders will front run and sell the close of 63 instead of taking a chance that it does not go above 63. And that's probably what happened with 64. Too many people thinking sellers above 63. Same thing is true 64. Bodies shrinking, 62, 63, 64. So we're losing momentum as we go down. We still might get down to the breakout point, 47 high, which is near the 60-minute moving average. But to sell here, I would not do it. If you're selling, it's better to be selling with limit orders above bear bars or above prior highs, like above 61, or wait for a micro double top with a decent sell signal. But even if the bears get something like that, any reversal will probably be minor. We'll probably have a hard time getting back below the 60-minute moving average. And there probably are a lot of buyers there. And for the bulls, it's a parabolic wedge, 3 legs, 47, 56, midpoint of the day's range. A lot of the bulls, they might buy with limit orders below things, especially below bull bars, but the stop order bulls will wait for a couple legs, 2 or 3 legs sideways to down. Bear surprise bar might get a little bit, maybe get a small second leg down. We have a little high climax low, 58. That's a magnet. The most important magnets are the breakout points like 47 or 26, and the single most important one is the 60-minute moving average. Yesterday's low or Friday's low is right there. That's an important magnet. So there is a cluster of support between the 47 low and the 60-minute moving average. So we might get down there. A lot of the bulls hope that we do so they can buy cheaper. Now on the daily chart, they still have Monday here, that small bar, and they removed it on the 5-minute chart. And they usually remove it on the daily chart as well. Normally they remove it sooner than today. Let me take a look here. It's still there, but they should remove that. Let me just try to reload the data again, see if it's gone. Yep, see it's gone. You can't see that it's gone, but there was a little dash in there for Monday, and they finally removed it. Can you buy here, scale in lower? Probably. Now, we have 4 consecutive bear bars. The bulls want a high 2, 66, but with the 4 bear bars and a bear surprise, a bigger bear bar, 65, we'll probably have to get a second leg sideways to down. So a bull buying 66 probably needs a wide stop, maybe all the way down here. So I think it's probably better, instead of buying above 66, wait to see if we get a micro double bottom, maybe 66, 68. And for the bears, they sold the 64 high, but I think a lot of them will scalp for a couple points. And that's probably what's going on with 66. Bears buying back shorts. You have some bulls buying at the moving average and also buying a dip below the midpoint of the day's range. Remember I said that we might oscillate around the midpoint of the range for the remainder of the day. Bulls, most of the bulls who buy above 66 are probably already a little disappointed by 67. The bulls are hoping for a big bull bar closing in as high. They're hoping it would be a bull surprise and lead to 2 or 3 legs up. They're not happy with 67 being a small bull bar. And somewhere in here, 54, 56, those are doji bars in a bull trend. They usually lead to a transition to a trading range. And I think we're in a trading range. But I also think the market's always in long. And I suspect we're going above 61, but I don't think we're going to get to the high of the day. We may go above 61 and maybe form a wedge. I'm going to leave the 50% pullback in there because that might be a magnet for the rest of the day. But we may be in a bull channel here. No, that's around the 13 sell climax high. That changed the character of the day. The bulls were trying to get a bottom at 8 and then at 12. And then we got a big breakout 13. And below 12, we fell for about a measured move down. So, that 13 high is a magnet. That's where we are now. Probably sellers here above 61. A lot of the bulls who bought see that we're starting to get smaller bars and that we might be in a trading range. And if enough bulls think that is the case, they'll scalp. They'll take relatively quick profits. And if enough bears think it's the case, they'll start to sell with limit orders above things, above 61, above 13 at the top of the channel. What do you do here? Well, you're either long or flat. If you're aggressive, you might sell right here above 61 or at the top of the channel. However, it's in the final hour, and that has increased risk. You're running out of time, so the profit potential is less. Yet, the high of the day, open of the day, Friday's close are all magnets above, and this could just drift up there. This is pretty good for the bulls. Even though the bars are not big, the absence of bear bars is very good for the bulls. I talked about that on Friday. Through here, we had 11 bars without a bear body. And I said, even though it's a lot of dojis, big tails, small bodies, a lot of overlap, it's a sign of persistent buying. Several of these bars with tails below on Friday were bear bars until the final couple seconds, and then they got bull bodies. So the computers were buying right into the close of the bar. So instead of bear bodies, they have small bull bodies or the perfect dojis. And that's really persistent buying, good for the bulls. It increases the chances that we would go higher. Another high one, but possible wedge, possible test of the top of the channel. I think it's better to buy a pullback. The bulls buying here are hoping that we'll get here, high of the day, by the end of the day. But we only have 10 bars left. And in the past 10 bars, we only went up a few points, 5 points, and we would have to go up 15 points to get there. While it's possible, I think it's unlikely. So I'm not going to buy above 70. I think we're going to pull back. We might have to go above 69 and then pull back, but I think we're probably going to pull back. I think the bulls are going to decide that the high of the day is unreachable, and therefore they'll take profits. Will we break above the top of the channel, like we broke above the midpoint of the day's range, or will we reverse down? I think we're going to reverse down, but I don't think we're going to go down far. I think we probably began a trading range with 62. We went down a little, we're going up a little, and we'll probably finish somewhere around there, somewhere around 43.28, 43.30. Sometimes you'll get a big surprise at the end of the day, so it's possible we can get there. Right now, I would say, maybe 20% chance we get there before the end of the day. Here, example, strong rally, pull back, and then at the end of the day, a very big rally, going much further than what was likely. So the bulls might do that. Bulls trying to break out. Different ways to draw the channel. That's one. Another, some computers will use a parallel. So that, and then that, and also corresponds to these highs. In any case, it's a small pullback bull trend, and if the pullbacks are small, bears are not going to make much money, and therefore shorting at the moment is not a good choice, especially at the end of the day. Bulls trying to get all the way back. We want to get the day positive. I am flat. The reason I'm not buying, I didn't want the 4 bear bars. I thought we would oscillate around the midpoint. I thought we could get to the high, but I did not think we would. I still don't think we will. And if suddenly everyone agrees that we're not going to reach the high, the market could quickly get a few big bear bars down to the midpoint. And the opposite is true. If the computers decide that we are going up to the high, and yesterday's high, Friday's high, we could get 2 or 3 big bull bars and quickly reach the target above. getting near the Globex low again. Now, if we get a good bear bar 73, is it worth shorting? Will the bulls give up, and will we get back down to the midpoint of the day's range? It's possible, but we have 7 consecutive bull bars, so it's a low probability bet. So am I going to short below 73? I'm not going to. You can argue parabolic wedge, 66, pause, 68, pause, 70, and then a third leg up, nested within a bigger wedge, 1, 2, 3, or 1, 2.